Happy Friday, ladies and gentlemen, Allincrypto here, and welcome back, guys, for what is going to be another jam-packed daily cryptocurrency market update, where every single day at 1 p.m. UK time, we try and keep you guys up to date on the latest and greatest things happening within the crypto space, but also the broader markets, and that is exactly what we're going to be doing in this video. So if you are new to my videos and finding yourself on my channel for the first time today, don't forget to check out that subscribe button because we drop an update just like this one every single day. We're largely going to be talking about the kind of macro situation that's going on right now, but we're also going to be looking at the Bitcoin USD chart, the IBIT chart, the Total 2 chart, and a couple of altcoins, because I don't think it's too long before crypto starts its next leg. And there has been a little bit of volatility that's been introduced to the markets, with slightly higher inflation than what perhaps we would want. And I think that's referring to CPI. But if you look at things like core CPEs and things like this, I don't think it's, or PCEs, CPEs, I don't think it's as bad a story as some are painting. I think the markets are just looking for an excuse to be a bit of a drama queen. And this is part of markets. They don't just go up in straight lines, they go up and down and to the right. And crypto is a kind of amplification of all of that. So we've got quite a lot to cover. We're going to really be starting off on the macro. We know what's been sort of plaguing the markets at the moment. And we've said generally it's a hump that we're going to get over. The bigger trend that we are now in from a macroeconomic perspective is one where risk does well. And gold is absolutely sniffing that out. Bitcoin is still in an uptrend against gold. Bitcoin has been and is likely going to continue to be the best performing asset that there is. And actually, we continue to see Blackrock gobbling up Bitcoin. Altcoins will have their time in the sun. It's just a case of waiting and being patient. And as an investor, you can either look at this as a good or a bad thing. You end up with a hell of a lot of time on your hands. But that's either a good thing, it means you can go and do things, or it's a bad thing if you just sit there and stare at the charts, certainly on those rainy days. But let's talk about kind of what's going on here. And I thought this was interesting. We're going to go down a bit of an interesting rabbit hole here. So this is from an individual on Twitter. He says the current situation, bonds are trading like rate hikes are coming. I don't believe they are, by the way. We're going to hear from JP Morgan that actually think there's going to be 4 cuts this year, not 3. So whilst everyone's going the other way, they're saying actually there's going to be more cuts than we think. And I still think 3 is very reasonable. We didn't think going into 2024, the 6 or 7 that they had priced in was reasonable. Looks like we were right on that, but I do think they are going to cut rates. I don't think things are going the other way, because we're at this kind of point with the fiat systems where actually upping interest rates just basically puts a burden on the Treasury and the government, which are the biggest kind of burdener of debt. And that's kind of stimulatory within itself. So we'll look at that also in just a second. But bonds are trading like hikes are coming. Gold is trading like rate cuts are coming. They are. And gold isn't just trading based on that. It's also trading based on the fact that fiat systems are screwed at this point. They're like a snowball that's reached a huge volume and is picking up, the whole snowball effect. And Bitcoin is going to be a higher beta and in the same category as gold. Stocks are trading like a soft landing is gone. It is, by all accounts. I don't even think there is a landing taking place. Oil prices are trading like the Fed avoided a recession. They have, by the way. We're going to hear from the UK, which has technically been in a recession. They're now seeing growth. And house prices are rising like interest rates are at 3%. Nothing adds up here. I think this is probably one of the worst takes I've seen. And actually, if we look over to am I going to be able to show this? You can kind of see this over here on the right. Here's my take on the current situation. Bonds are trading like Yellen, who's in charge of the Treasury, the government sort of bank or spending or accountant, if you will. So bonds are trading like Yellen is on the loose, printing $5.5 billion a day. Gold is trading like Yellen is on the loose, printing 5.5 trillion a day. Stocks are trading like Yellen is on the loose, printing 5.5 trillion a day. Oil prices are trading like Yellen is on the loose, printing 5.5 trillion a day. House prices. So you see what's going on here, and we know that this is literally what's taking place. So even though we do have supposed QT, high interest rates, they haven't been getting rid of, i.e. dumping into the market bonds, because I don't think they could do that. What they've been doing in the form of QE is allowing them to basically expire. But that QT that Powell's been implementing as the Federal Reserve has largely been null and void by the QE, or the kind of spending, if you will, is a better term for it, that Yellen's been introducing to the markets. This is why things have been doing well, and this is set to continue, the spending, and actually QT is set to start to taper off. So it's a very bullish kind of macro environment that's going to see stocks, housing. Remember, we're bullish on housing and bonds. You need liquidity for that, and we've looked at liquidity cycles previously. Bit of an interesting tweet that I want to show you guys in regards to JP Morgan and what they came out, or sorry, not JP Morgan, Goldman Sachs, and what they came out and said yesterday. Goldman now sees 4 25 basis point Bank of England cuts this starting in June, with cuts to follow in August, September, and November. See 4 further cuts in 2025 and another in 2026, taking bank rates to 3%. So that's the Bank of England. We did actually get news from the UK that's actually seeing some pretty decent growth, which we're going to look at now. So UK economy posted 0.1% growth in February, in further signs of recession rebound. So markets always climb up. Equities just need any reason and they'll do well, because equity investors are glass half full people. So what I'm really trying to show with a lot of this, and this is why we're bullish on housing. I'm going to show you a housing ETF that I'm actually bullish on, and obviously bonds, which are obviously both rate and liquidity sensitive markets. So this is housing. This is the real estate spider housing ETF. We're bullish on this, and we took a bullish stance round about here when we were identifying this bullish divergence. Housing going up is a great sign of generally things doing well, along with TLT. I know I lose people when I talk about this. We're still bullish on TLT, by the way. We haven't been in the ding-dong along buy bonds, wear diamonds, foolery, supposed macroeconomic makes money through not investing and other sources, like telling people how great they are, camp. This is the point where we got bullish on bonds, and we're still bullish on them. And this is a broader barometer for liquidity. And we think that rates, where we are macroeconomic, is going to support that, and crypto is going to fly during that environment. Now let's bring things into the kind of crypto sphere. Yesterday we had news that Blackrock buys 2,720 Bitcoin, worth about $191 million. It was a big day yesterday. Today's holdings are now at 270,000 Bitcoin. And you can see this is how BlackRock have been adding to their ETF. I think this is a trend we are going to see continue. And on the flip side of that, let's just take a look, 7 days and 23 hours, we're going to see the new supply of Bitcoin get cut in half. So there's this great equation internally for Bitcoin. Remember, technically we've got higher targets as well. And macroeconomically, we think Bitcoin's going to fly. Altcoins are going to bask in that sun. And our bet has always been to more of a percentage. This is from Eric Balanchunas. Excuse me. IBIT is up over 50% and has taken in $15 billion in new cash in 3 months. Both of those numbers are double any other BlackRock ETF, and they have 421 of them. That is about as hot as the iron gets. Very interesting. You know, you are looking at the biggest opportunity that there is in the markets in the cryptocurrency space, and people have that long face, and it's why we make videos every single day, is to act as a steady hand in what can sometimes be a very rough sea, but a smooth sea never made a skilled sailor. And hopefully, you know, there's method to our madness here. You know, we really try and take a 360 view of things. If you want to get an even deeper dive on everything and unlock my portfolio, do consider becoming a Patreon. Let's talk about some charts. Let's start off with IBIT. So we've spoken a little bit about BlackRock. This is their trust. This does not look bearish to me, ladies and gentlemen. In fact, it looks just like the Bitcoin chart. It looks like a bit of a bull pennant that's likely going to set up for broader continuation. And we're seeing the same exact damn thing for Bitcoin. I think we've drawn this on a smaller time frame. And the most important chart for me, as somebody that's more in altcoins than they are Bitcoin, is the total 2. If this pattern plays out, you're going to see a run to around about $1.4 trillion, which is going to trigger the broader pattern that we have, which is going to see the crypto space get to 3.7. Now, we just spent the first half of the video looking at why all that might be. What's the sort of macro backdrop to see that do well? And we have technical merit when we dive into things to really support that even further. We could really extend on this massively with things like USDT DOM, which we think is coming down. So do not fear. All in Crypto is here. We are going to continue to be that steady hand for a lot of you. There's lots of kind of small, you know, sort of falling wedge S structures on altcoins. ADA's one. We're not particularly that bullish on ADA, but there is a bit of a falling wedge here. I also noticed one on Algo. Also, you've got a bit of one on HBAR, which is right at its support. It's not going to be long before crypto turns and the broader trend resumes. Gold doing really well today. Remember, gold very much making its way towards that target that we had for it, that we were setting out pre-break. And of course, Bitcoin is in an uptrend against not only gold, but the SPY. So I think this is my gold BTC chart. You can see you ran into resistance and you're pulling back. This has made lots of targets for us. You've also got gold or Bitcoin SPY. It's not going to be long before the bull that we are in resumes. Ladies and gentlemen, I'm hoping you all have a fantastic Friday and a great weekend. We'll be back tomorrow with another update. See you all in the next one.